Hello, my name is Brenton Harrison of Ultra Bars Academy, an online course where we help people with a mountain of student debt take back control of their loans. And we're here today because the payment and interest freeze on federal student loans is ending. And we want to make sure you have all the tools and tips you need to put your loans in the best situation when those payments restart. Let's get started. If you have federal student loans, then hopefully over the last 18 months, you've been able to get some financial benefit from not only not having payments for your federal student loans, but also not seeing any interest accruing on those loans during this period. As a part of the coronavirus aid, the financial stimulus packages that have come out over the past year or so, there have been positions for people with federal student loans where if you're trying to pay down your loans faster, you've been able to do that by not seeing any interest attached to your debt. Or if you just needed the opportunity to have a respite, a break from those loans, maybe to shore up your savings, to pay down other consumer debt, or unfortunately, maybe you just needed that to be able to just make it through with other things you had going on financially, well, you've been able to do that. But unfortunately, a few weeks ago, we find out that that payment freeze is ending. Not only will payments resume in the coming months, but interest will start accruing in the coming months as well. So we wanted to do this video where we give you some quick hitting tips and also information about what's ahead so that when that time comes, you're as prepared as you can possibly be. The final extension and payment freeze for federal student loans ends on January 31st, 2022. Now, I know throughout these stimulus packages, you've heard the final extension 2 or 3 times, but this is actually it. The ride is coming to an end. They referenced it multiple times in the press release and the press conference when announcing it. This will be the date after which point payment and interest will resume on these loans. Definitely not. The safe bet is that it's going to take at least 30 days from the date that the payment freeze ends before you would have any payment required on these loans. So you're probably talking about the end of February, maybe the early March. But in terms of a specific date, your loan servicer is required to reach out to you before this payment freeze ends to let you know their process for getting repayment started. You might have already been contacted by your loan servicer, and they're going to let you know, number one, that the payment freeze is ending, but they're also going to let you know the process for finding out your specific payment date. And it is absolutely crucial that you know that payment date before the payment freeze ends on January 31st. This is why it's so important that you understand what your specific payment date is prior to the payment freeze ending. Because unfortunately, even though you will have at that point gone almost 2 years without making a student loan payment, when it resumes, it's going to resume via auto draft. That's right. After almost 2 years of getting used to not making a payment, you're going to be plunged right back into the payment process. And if you don't know that payment date, you would essentially do it by surprise. And if there's one way to ruin a week, it's going 2 years without making a payment and then having $500 or $1,000 or $1,500 or $2,000 taking out of your account on a day that you didn't know it was coming. So definitely reach out to your loan servicer, ask them what the specific date is, and maybe put a calendar reminder on your phone the day before so it doesn't catch you off guard the morning that that payment comes out of your account. Your initial drafted payment after the freeze ends will be whatever the payment was that you were making prior to the pandemic. The payment freeze in 2020 started before many people had even filed their 2019 tax returns. If you've been on an income-driven plan in the past, you know that one of the ways that they calculate your student loan payment is by checking the income from your previous year's tax return. The most recent one they have on file, they're going to look at the adjusted gross income, they're going to do their own calculation, and they're going to tell you what your student loan payment is. Well, the good thing is, if you got a significant pay increase in 2019, or if you got a significant pay increase in 2020, the payment that you were making prior to the payment freeze had not yet reflected that increase. decrease. It was still based off of your 2018 pay. And fortunately for you, when payments resume, it will be exactly what you were paying prior to the pandemic, meaning that for at least a few months, you're going to get a reprieve from having your new pay reflected in your loan payment, and you'll still be able to make it based off what you were making 2 years in the past. So how long will you get this benefit? You'll get it until the next recertification date for your income-driven plans. Every year, borrowers who are on income-driven plans have to go through a process called recertification. And that's when you give updated pay information to your loan servicer, your previous year's tax return, or a pay stub, or an offer letter from an employer, so they can use that document to update your pay for the upcoming 12 months. Remember that these income-driven plans are based off of a percentage of something called your discretionary income. So your loan servicer wants to always make sure they have updated information on file so your payment reflects what you're actually making at that point in time. Now, typically, the recertification dates that you have for these income-driven plans are going to be the same every single year. If it was in June last year, it's going to be in June next year, unless you make a change to your loan by doing things like consolidating it. And if you've been on these plans in the past, you also know that your taxable income, like we just mentioned, has a lot to do with how they calculate your payment. And many of you may have made certain changes to your taxes to make sure that you're in the best situation for your loan payment as possible. It could be something like filing your taxes separately from your spouse, or maybe you put a tremendous amount into your retirement plan at work with the hopes of driving down that taxable income and thus driving down your student loan payment. During the pandemic, however, recertification dates, which typically never change, were altered and moved for many borrowers by their student loan servicers. So many people have no idea what their new recertification date will be, and depending on what date your loan servicer chooses, you might have filed your 2021 tax returns before you apply for your new student loan payment, which means they would use that 2021 income to calculate your payment for the upcoming 12 months. Now, think about what I said in the previous section. I said that before the pandemic, many people at that time were making payments based off of their 2018 tax return. And now I'm telling you that based on your recertification date, you could be making payments off of your 2021 taxable income, which means there's a possibility that your 2020 taxable income and possibly 2019 would never have been reflected in your student loan payment. Now, you may have been one of these people who saw your income explode in 2019 and 2020. Maybe you were one of the few people who kept their jobs and you saw significant overtime pay or a bonus, or you were working crazy shifts. And for you, having them skip your 2020 tax return is great because you will never be in a position where your payments based off of that year where your income just went gangbusters. But you could be one of those people who did lose their job or saw their pay cut or saw their income eliminated completely in 2020. And unfortunately, if you don't find a way to have that reflected in your payment, you will have missed an opportunity. Because if you didn't get paid in that year, or you got paid significantly less, you would hope that you would at least get the benefit of having a reduced student loan payment based off of that reduced pay. But fortunately, if you are in that situation where your income decreased significantly during 2020, there is a way to make sure that your upcoming student loan payment reflects that decreased pay. We can get into the details of how income-driven payment plans are calculated on another date, and we actually have done that in the past on this channel. But for now, here are a few quick tips to let you know if you should reach out to your loan servicer to ask them to recalculate your upcoming payment based off of your 2020 tax return. The first step is to find your 2020 tax return, but also the return your loan servicer was using to calculate your payments prior to the pandemic's payment freeze. And on those first few pages of those returns, you'll see a page called your 1040. And towards the middle of that page, there's going to be an income listed that's listed as your adjusted gross income. Now, here's the key. If your 2020 adjusted gross income is less than the adjusted gross income on the return used to calculate your current payments, then you're likely in a position where it would benefit you to ask your loan servicer to recalculate your pay based on the 2020 document. Why? Because again, income-driven plans use your adjusted gross income to calculate your payments, and the lower that adjusted gross income, the lower your payment will be. So if your 2020 adjusted gross income is lower, you need to contact your provider, ask them to recalculate your payments so that it's reflected based on your 2020 pay and not the one being currently used to calculate your payment. And there are also family changes that can help reduce your student loan payment under these income-driven plans, even if your income hasn't actually changed. Number one, if you've gotten married or if you've birthed a child or are pregnant with a child that's due to be born in the same calendar year. Now, technically, you can recalculate your payment now in 2021, even though it won't resume until 2022. So the calendar year, if you're pregnant, shouldn't be an issue. But remember that even if you are pregnant with child, this is something you can use to lower your student loan payment. Next, you could be married to a person who has a much smaller income than you, and or maybe they don't have federal student loans themselves, and you've moved since the pandemic payment freeze started to California, Texas, Washington, Wisconsin, New Mexico, Nevada, Louisiana, Idaho, or Arizona. Now, that's very specific, but I know a ton of people who moved to Texas since the pandemic started. But if you're in these states and you moved there since the pandemic started, the reason is too complex to break down in this email. But in these states, there are ways to actually split your family's income in half before you apply for your student loan payments. So as an example, if you make $200,000 in one of these states and your spouse makes $0, it's possible to have your loan servicer only consider $100,000 as your income when you calculate your student loan payments, while the other $100,000 of your pay would be attributed to your spouse who isn't trying to get their loan payment calculated. Now, this isn't an easy decision to make, and you should only be doing it under the advisement of a tax professional. But if you're in one of these states, based on their tax laws, there is a way to have your taxable income split in half between you and your spouse. And since you would be the only one who is applying for a student loan payment, it can significantly reduce your upcoming student loan payment. And then lastly, there are a number of people who I've come across who had a family member who was down on their luck financially through the pandemic, and they took those people in 2020 and might have filed for them as a dependent on their tax return. And if that's the case in your situation, you also could be in line to benefit from recalculating your income using your 2020 pay as opposed to your 2019 or 2018 pay that you were making prior to the pandemic. Now, if any of these items are relevant to you, you can ask for a recalculation of your payment by logging into studentaid.gov and clicking Recertify an Income-Driven Plan under the Manage Loans section. I'm actually terrified of what could happen when the payment and interest freeze ends in a couple months. Student loan servicers don't have the best reputation for excellence in normal times, much less when they're trying to plunge tens of millions of borrowers back into repayment in the same 30 to 60-day period. So it actually worries me. But I would say if you're trying to make sure that your student loan payments don't get messed up or that your credit isn't impacted, the first step is to make sure you have the correct contact information on hand with your student loan servicer. You want to make sure they have the accurate payment information, the accurate phone number, the accurate address, the accurate email address, so that you don't miss any communications. And even if your payment information and contact information is correct, you want to just make sure that you keep a real keen eye out for any communications between now and then from your loan servicer. Make sure that numbers you don't recognize get answered, or a voicemail that you may not typically check gets checked. Make sure that you dig into your email address to make sure that an email from your loan servicer doesn't go into the promotions tab or the spam folder or the junk folder. You just want to make sure you're not missing any of those communications, because they could be letting you know crucial information like your payment date, what your payment will be, and other information you need to know about your loan servicer in the upcoming months. And you also want to make sure, in addition to your loan servicer, and some people have multiple, that you log on to studentaid.gov and correct or update your information with that main body of information as well. StudentAid.gov is the Department of Education website that keeps everything in check in terms of the number of loan servicers and the information regarding your debt. So you want to make sure that your contact information is accurate, both with your loan servicer and also with StudentAid.gov. If you haven't heard, Fed Loan Servicing and Granite State are both pulling out of the federal student loan business. They will literally no longer be servicers that you can have under the federal loans umbrella. Now, this has freaked out a lot of people, specifically because Fed Loan Servicing is actually the only student loan servicer that processes applications for public service loan forgiveness. So, them pulling out is actually a big deal. But if you're worried about your payment terms, the amount of credit that you have towards public service loan forgiveness, and things like that, don't worry about that. None of that information will change. All of the credit that you have with Fed Loan Servicing will carry over to your new loan servicer and vice versa. Now, borrowers who have Granite State will have a little bit easier transition because it's already been announced that Ed Financial will be taking over as their servicer. So if you have Granite State loans now, in the next few months, maybe you've already received this communication, you'll get details about what that transition process will look like, taking it from Granite State to Ed Financial in terms of what your login information will be, your new loan number, if applicable, and any of that information will be reflected in that communication. Now, people with Fed Loan Servicing, we don't yet know who will be taking over as their servicer. So that is, again, why it's crucial that you keep an eye out for any communications from Fed Loan Servicing, because they might be telling you who that servicer is and what their transition process will look like in the coming months. Even though you don't have any payments due or interest accruing on your student loans right now, there are some situations where it actually makes sense to go ahead and refinance them, even though the payment freeze hasn't ended. Believe it or not, there are people on these income driven plans whose payments are so high that they're actually due to pay their loans off in full before they're forgiven. And the reason many people use income driven plans is so they can get their loans forgiven. So if you're one of those people and your payment's so high that you're going to pay it off anyways, you want to make sure you pay it off at the lowest interest rate possible. Unfortunately, right now, private student loan interest rates are offering some of the lowest rates ever recorded. So if you're worried about the possibility that when the payment freeze ends, that the private loan interest rates won't be as favorable, then refinancing now would put you in a situation where, yes, you might have to make payments for a few months that you wouldn't have had to make if you just stayed put, but at least you'd know for sure that you'd benefit from these bottom cellar dweller rates that we're seeing with private student loans. Specifically, Common Bond is a private student loan refinancer that for many people is offering a deal right now where if you refinance your student loans with them, you'll get 6 months of 0% interest on that debt. Now, you still have to make a payment, unlike the federal student loans, where the payment and the interest is frozen, but you would at least know that the interest freeze will line up essentially with what you're getting from the federal student loan provider. So for people who are trying to make sure those loans are paid off, it's an opportunity to lock in a low rate, move their loans over, and still benefit from 6 months of 0% interest as they make those chunk payments on their loans to reduce their debt. I would encourage all of you to set a calendar reminder for a few months after the payment freeze ends to check your credit report and your credit score to ensure that there's no missed payments that were inaccurately reported or that your loans haven't been reported as defaulted in error. There's just a whole lot of things that can go wrong when all these people are getting plunged back into repayment. And you want to make sure that there's not something that's an error on your loan servicer's end that ends up being a big deal for you to have to unravel on your own credit report and your own credit score. Also, when it comes to the communication, we're talking about all these things that are going on with your payment date or potentially transitioning your loans from one servicer to the other. You want to make sure that if you haven't heard by your servicer from probably mid-December, late November, that you reach out to them to try to find this information on your own. Do not lean on your loan servicer to have all of their ducks in a row to make sure that your credit, your information, and your payment is in line before all this begins. Lastly, as odd as it may seem for me to give like a compliment to the quality of a federal site, the federal student aid site is actually excellent. So the Department of Education site for the loans, studentaid.gov, has a great information base about income-driven plans, about standard plans, about the changes that are coming with loan servicers, and they release updates frequently through their newsletter. So I highly encourage you, if you're trying to figure out anything that might have changed between the time that I released this video and the end of the payment freeze, to check out that site because they have the most accurate, up-to-date information, and it's something you should always keep on your bookmarks as long as you have this debt. That's it. Once again, my name is Brenton Harrison of Ultra Borrowers Academy, an online course where we help people with a mountain of student debt take back control of their loans. I hope this was useful to you. There's big things coming ahead with student loans, and we need to make sure that we're always aware of the changes, the updates, and the adjustments so that we have the information that we need to make the decisions that are best for our loans. If you haven't gone to our channel and subscribed, please do so, and subscribe to the notifications so you know when new content is being released. And if you're an ultra borrower, if you need a plan for your loans and you're struggling in the wilderness trying to figure out what to do, go to ultraborrowers.com. We have many courses. We have a full course. We even have consultations available for people like you that you can be on the journey of someone who can say at some point in time, I used to be an ultra borrower. Talk to you soon.